Hello everybody. In this session we'll be looking at the SP 500 for trading on the 8th of April, Wednesday. We have a daily chart here, daily candlestick chart, and it's an Ichimoku chart. And as we've seen before, the outstanding features of the Ichimoku chart are the cloud, that's the cloud there, or the Kumo. We also have the two lines here, the pink line being the Kijun Sen, the green line being the Tenkan Sen. Their derivation is quite similar, the difference being that the green line, the Tenkan Sen, is a faster line, whereas the Kijun Sen is a slower line. Now we can see here, as we thought would happen, that the two lines were potential areas of support for this market, for this small retracement. And we can see here that the market did hold up at these levels. It's not terribly bullish at the moment, but at least this bearishness that was in the market over the last few days, especially with this very big red candle, we can see that at least that bearishness has disappeared from the market. Now this line, as we said, the Tenkan Sen, has held a support, and that's what we tend to see in fast-moving markets. When the market's moving very fast, this line will act as support or resistance. We can see it's held roughly as support here. Here we can see that it's held as resistance here. So we'd expect to see this market potentially appreciate. Also, we've got the cloud, which is now acting as some sort of support for the market potentially. And we've also had a twist in the cloud a few days ago, roughly about a week or so ago. The cloud twisted to being positive, which means that the market is fairly bullish. So a lot of bullish signs here for this market. The Tenkan Sen is above the Kijun Sen, which is bullish. If we look at the Chiku span, that's this line here. The Chiku span is basically the closing price today versus the closing price from 26 periods ago, and that's above the closing price from 26 periods ago, and it means that the market's bullish. I don't place as much importance on that as on these two lines, the Kijun Sen and Tenkan Sen, or on the cloud. Now, importantly though, with these two lines, they're also flat, so we don't really have a lot of direction in the market at the moment. What we'd like to see is for this market to take out the highs here of the last candle, and then we'd see these two lines start to turn up. There are a couple of Japanese candlestick patterns happening here at the one time, which adds a bit more weight to the evidence that we could see the market appreciate. We have a small green bodied candle, which is fully within the body of the previous candle. That's what we call a harami pattern. And we also have roughly equal lows with the two candles, with the last candle and the previous candle. That's called a tweezer's bottom, and they're both potential reversal signals. Now, they're not reversal signals until we have evidence that the market has reversed. Now, the evidence would be the market taking out the high of this candle. So if we take out that high, then potentially we could place a buy stop there, could place a sell stop down below these levels. So we'd expect the market to appreciate some sort of resistance here from these previous candles, where we had some price rejection from around 846, 845, and if the market does trade off, then we've got a lot of support all through these levels. The support could hold up anywhere through the cloud, down around the levels here where we had upside price rejection from these candles, or at the Kijun Sen here, down at these levels. So good potential bullish signs, not too bearish at the moment.